Welcome back, dear traders. Our analysts are ready to share the key news and the market developments in American markets. After a brief moment of optimism, Wall Street is again overshadowed by investment fears. Investors are discouraged that high inflation will persist for too long. The last session of May might end up with the sell-offs in tune with the overall pessimism. The start of the week does not bode well for the stock indexes. All three Wall Street indexes are trading in the red. In the pre-market, the S&P500 shed almost 40 points to trade at 4,113 points. The index is expected to trade in the corridor between 4,020 and 4,180 points today. By and large, Wall Street is finishing the spring on the same pessimistic note. Fears and uncertainty are again ruling market sentiment, fed by the threat of a further rampant inflation and the looming recession. Market catalysts today come from the European Union, and European leaders reached the consensus on the embargo on Russian petroleum imports delivered by sea. European Council President Charles Michel tweeted that the blueprint would immediately slash 75% of the Russian oil imports and 90% by the year-end. The plan does not refer to the Russian oil and gas which flows via the pipeline that makes a concession to Hungary, Slovakia and the Czech Republic. Despite the fact that the ban on oil shipments by sea will be introduced step by step, oil prices are heading for fresh highs. Some analysts predict even the peak of $150 a barrel. This makes the fight against inflation more complicated. Even good news on the COVID from China could not inspire investors. They are stoking fears in light of fresh inflation data. Consumer prices in Germany jumped 8.7%, while inflation in broader Europe accelerated to 8.1% in May, from 7.4% in April, and higher than the expected 7.7% increase. Tonight, investors are alert to the meeting between Fed Chairman Jerome Powell and the US President Joe Biden. Investors will be looking for clues to oppose in the Fed's aggressive monetary tightening, so market sentiment will hardly change. The US dollar perked up and rebounded from a one-month lows. Its index passed 102, heading up in confidence. The outlook for today is bullish. Risk aversion is pushing the US currency up, and the expected corridor for today is seen between 101.70 and 103.10. Apart from inflation fears and uncertainty, the US dollar is benefiting from a speech by Fed policymaker Christopher Waller. His hawkish remarks shock investors' hope for opposing rate hikes. The policymaker said in Frankfurt that he advocates for further rate hikes at a pace of 50 basis points, even after inflation is pushed down to the neutral rate of 2.5%. His determination encouraged a rise by 10 basis points in US Treasuries yields, which climbed to 2.85% in the Asian trade after they dropped to 2.71% last week, the lowest level in 6 weeks. And the economic calendar reminds us about the US PMIs and the consumer sentiment index later today. Meanwhile, the US dollar maintains bullish momentum. The USD CAD pair has halted its decline amid the broad-based strength of the greenback. Today, the currency pair is trading at about 1.2676. It's too early to predict the overall uptrend. The intraday corridor is defined between 1.2600 and 1.2710. The loonie is unwilling to give in to its American counterpart on the back of upbeat economic data from Canada. According to flash estimates, the Canadian economy grew 0.2% in April on month, amid robust performance in the mining, oil and gas industry, transport, warehouse sector and wholesale sales. Besides, the revised GDP showed that the national output expanded 0.5% in March, weaker than the 0.9% growth in February. 14 out of 20 sectors looked expansion, with the best performance in the services and manufacturing sectors. The sectors focused on clients benefited from lifting COVID restrictions. Apart from the strong stats, the Canadian dollar receives support from a rally in the oil market. Brent crude surged almost 2% and WTI rocketed 3.3%. All in all, oil prices have gained nearly 9% over the last 4 trading days. The crypto market is unaffected by the risk of mood, which has already dampened optimism in the stock market. Bitcoin has settled above $31,700. The nearest target is at $32,200, but the token lacks the confidence to hit this high. The overall pessimism in the global financial markets undermines the bullish momentum, so the flagship crypto might get trapped in the flat market until it will be able to reach the 33 or 35,000 area. The intraday corridor is defined between $30,300 and $32,200. And this is how Wall Street is going to finish this spring. The bearish sentiment is mounting again due to inflation fears. Will fresh economic data be able to encourage traders? We will discuss it tomorrow, and see you online soon.